Hello and good morning. Welcome to the first section of my beginner's course. Um, the reason why I decided to create a trading course is because I see a lot of successful traders create courses and then sell them and profit off of other people's desires to find success in trading by seeking new knowledge. And so I kind of want to reverse that a little bit by creating a complete beginners, intermediate, advanced, and masterclass course. Before we can get into any of those, we always have to start with section one here, which is welcome to the largest of the financial markets. We're talking about the foreign exchange market. This is going to be an introduction to trading, give you a little bit of background about trading and how the foreign market came about. So, first thing is what is the forex market, right? And how is it created? So, the forex market is an exchange place in today's modern world. However, the forex market kind of was always around for hundreds of years. A lot of people do not realize that trading has been taking place for centuries. We have been trading rice, corn, soy, beans, right? Commodities that were valuable in that time period. And we would trade these things, and it made the society more robust. It gave opportunity and options to the society of those times. But what we really want to understand is, right, the evolution of that market. How first it was commodities, then it switched into coins, silver coins, gold coins, and then it slowly evolved and moved into paper money. And I believe China is the one who began the fiat currency idea, the idea of a paper note representing value. And we all know in today's world, by now I'm sure, that paper money is basically a government tended note. It's tendered by the government, basically backed, you can say, by the government that this is its value, and we have some sort of security to back that currency. Well, the whole world kind of shifted, and things have changed a lot, and money has changed, and the value of money has changed. But what hasn't changed is the exchange places in which we exchange our money for items or products, which is, you can say, commodities. The exchange place from money to money, so the US dollars to euros, for example. An exchange place for your money for a ownership in a company, a stock, potentially even. So you're exchanging your monetary value for some sort of different value, right? We can see here that the forex market, right, the modern one that we want to learn how to trade in, is started trading in the early 1970s, and this is really an interesting time period when we're moving from the gold standard, and then moving from the petrodollar standard. It's where the dollar was backed by oil and stuff, and then in today's world where we're trading with fiat currencies, where it's not technically backed by anything other than what our government says. So you can say it's backed by the gross domestic product, but that's all. It's very deep. It's all perceptional. So can you get rich by trading forex? This is what most people are interested in trading for. They want to get rich. They want to make money and leave the rat race, escape their jobs. So just so everybody knows, it is possible. It is possible, right, to get rich, right, by trading. But you have to do it well, okay? And there's evidence that's published by forex brokers that show that more than 70% of forex traders lose money rather than profit. Forex trading is volatile, it is manipulated, but that is besides the point. A lot of people will focus on those points to outline the reason why you shouldn't trade rather than why you should look into more and research more to learn how to profit and be the 30% of these traders who are actually profiting from the market. So, what is traded on Forex? So, the foreign exchange market is traded, and like I was saying before, from its origins to today's, it's all interconnected throughout all the central banks and whatnot. They created this market for as a very specific reason, and it's made trading and the global market more efficient. So they are offering, right, CFDs, right? These are contracts for difference based on stock indices, commodities, right? Like I said, that's where the origin of it all started, was commodities, and even individual shares, so shares of companies like stocks in the New York Stock Exchange. But the most important thing we have to understand is, right, is that yes, we can make money. Yes, we can get rich. Yeah, sure, there's history behind this market and how many people have been trading it for all of these years. But what's most important that we understand is who controls the Forex market. So this is extremely important because the Forex market is controlled by, market makers, banks, financial institutions, anything of that matter there. So it is a decentralized market. Okay, it is not under the control of any sort of body. A lot of people will point to the central banks as the controllers of these markets, but they are not. Okay, this is a very specific thing that a lot of people will wonder is they think that the markets are moving to manipulate traders uh, of our caliber, retail traders, traders who are not involved in the big financial institutions. Okay, um, we are going to be retail traders unless we join up with somebody who's influential in the market, such as these four big institutions here. So these banks, JP Morgan, Citi, Datush, and UBS, they are um, trillions in value, and they have the liquidity, right, the money and the power to administer uh, money into the markets, move markets, and have people follow their decisions. So they are influential, which is really great to know that you can look back to a big institution, a big bank, watch what their strategies are, watch what they're doing, maybe not specifically and maybe not with the understanding of why, but you can at least see what it is that they're trying to do once you put the dots together and create the puzzle there. So what is trading and investing, right? uh, Trading and investing are different. Trading is creating short-term growth, whereas investing is creating long-term growth. Both of them require opening positions in the market with the expectation of a return. Okay. Now, you're opening positions in the market with an expectation of return. So, in trading, your expectation of return is short term, and in investing, your expectation of return is in the long term. If we take a look here, the key takeaways for this is that investing takes a long-term approach to the markets and often applies to such purposes as retirement accounts. So we're talking 401ks, Roth 401ks, Roth IRAs, and these type of retirement accounts, they diversify into bonds, into commodities. They diversify into our markets, the New York Stock Exchange, even in other markets, foreign. Um, and they have a different type of asset allocation. So, for example, there'll be tech stock, there'll be industrial, brick and mortar. There'll be different types of industries that are allocated into this fund for you, so that way you have the best edge over the market and but basically protecting your money. Because that's the number one rule of investing, is to protect the capital that you have, the equity that you have gained. So trading involves, right, that short-term strategies to maximize, okay, returns daily, monthly, or quarterly. Okay. So it's that short term effect. Instead of investing where we're investing with the idea of this company to be successful and to continue its expansion and to induce other investors to invest in their company, which may take years and years, potentially decades. Trading involves that short term strategy where you're looking at a daily return, or like the big guys, you're looking at the monthly or quarterly returns and performance. Okay. So investors are more likely to write out short term losses. Okay. While traders will attempt to make transactions that help them profit quickly from fluctuating markets. So a good example of this is Warren Buffett. And in this year of 2022, he is down billions of dollars. He is losing billions of dollars. But if you zoom out over his 20-year period of his managing his portfolio with Berkshire Hathaway, you would see that his edge is still playing out. His edge in trading is that he is an investor. He is investing for a return. Okay? And because of that investments, he's not concerned about losing those billions in the short term. Okay? He is not worried about losing those billions in the short term. He's going to ride out those short term losses because he knows in the next 10 years, those losses will quickly become profits. So, a lot of people, when they're getting into trading the Forex market, they don't really understand what is being traded. So, a lot of people immediately go to, oh, they're trading pairs, Forex pairs, and commodities, and indices, and metals. But what really is being traded underneath all of that are assets. They are all assets, but they're with a contract for difference, CFDs. Okay, these contracts for difference, they allow you to. So these contracts for difference, they allow you to enter in at a price in time, and when you enter at that price, right? Let's say you enter with a buy. You are trying to go long in the market. You are trying to see price increase in value. So you enter a contract at a set price and you see price increase. Well, you're going to get paid on the difference, okay? You're going to get paid on the difference from your entry to where you're exiting the market. So your entry and exit points are important. But CFDs are contracts for difference, okay? So these contracts for difference allow you to manage your risk very well. And I would even go as far to say because of the liquidity inside of the Forex market, where it's trading $8.5 trillion daily, you have a better risk management because of the liquidity, where your orders will be filled exactly where you are wishing them to be filled, which gives you a little bit more control of how much you're risking. Whereas, let's say in the stock market, in a low volatile stock where there's not enough activity, you could be slipped through on your stop order, for example, and you'll have a lot of slippage, and that slippage will result in an even greater loss than you had planned. So CFDs are very amazing. So how do you even begin to trade and open these CFDs and getting involved with this market? Well, you have to actually open an account with a broker. So these brokers operate within a whole matrix of financial institutions. So that is begging the question then, who is operating the market, right? So we can see here that who's operating the market. We have major banks. So major banks. So we can say central banks into other major banks like J.P. Morgan. Then there's routers and EVS, right? So these guys are basically going to be taking the liquidity from these big players, and because of that, they're going to be administering that into, right, the markets. So everybody who is looking to basically have that asset allocation where their money grows through the long term, and they're looking to invest, this is why the markets typically trend. And most of the time, when you look at the charts through a large time period, um, it'll trend both ways. But you'll notice too that a lot of the times with a lot of charts too that it's just an uptrend. It's just more and more money keeps falling into the market. More and more money is bolstering its prices. And we can think that because of the hedge funds, retail ECNs, okay? So this is small money, pretty much, sovereign, and market makers. So these market makers are going to actually use the liquidity that they grab from investing, from from basically any source of money, even money from the government. They're going to give this liquidity, this money, to be managed. Okay, now it's not just sitting; it's going to be having a manager, and these managers are going to administer and create the markets with the liquidity they are provided. And underneath all of this operation, where these players are really the ones who want to create a price change, who really are going to be driving price, we as the retail traders are at the very bottom of the list. Okay. Um, and what I really liked about this is that there's this little fun fact here, right? This little fun fact right here. It says, did you know that until the 1990s, only the big boys, financial institutions, were allowed to trade Forex? So that initial requirement was that you had to trade, right? Um, or that you could, not that you had, but that you could trade international currencies only if you had 10 to 50 million dollars. That is a lot of money. And not many people are going to, in their lifetime, have 10 to 50 million dollars to start with. What's What's amazing about the forex market is that we can now trade. We can open an account with $25, $500, $1,000, whatever it might be, and be able to have a leveraged trading with these contracts for difference, and try to analyze the markets to understand how you join these major banks, routers, EBSs, hedge funds, and market makers in these trades. So this is all very exciting because these guys are moving money and they don't really care if you make or lose your money. Okay, that's the power of being a retail trader and being independent. You are not forced to do anything. Um, Everything is dependent on your decision making and your choices. So what's really crazy is these market makers, central banks, right, such as the guys we had outlined prior, J.P. Morgan, Citi, Touche, and UBS. They are providing liquidity. Where are they getting this liquidity? Me, you, the average man, we give these banks our money. These banks cannot just sit on money. These banks put the money that we are giving them, into the markets. So you'll go to realize if you look up a little bit about banks like JP Morgan, Chase, these people do not keep money in their banks. Okay, they might have a max allocation um, portfolio where they store all of their wealth, and at the bank itself, they have maybe $1 million in their vault. That is all they have available to them, which also depends on location and the liquidity of that location for that bank. Um, Ultimately, though, all these banks, they get rid of the money that is deposited into them. Okay, and especially with how electronic banking works, it has made banking more secure on their end, not so much for our end, because they control the keys to our money. So we know now, right, what the forex market is. It originated hundreds of years ago. We understand that trading and investing, right, is opening positions with the idea of creating a return. Um, we understand that in the forex market specifically, we're trading assets with a contract for difference. We understand that if we wanted to open those positions, we need to be a part of a broker, which will be a part of the market makers, ECNs. We're going to be connected to that whole list there. We know that the people who are operating it are the market makers and the liquidity providers. Um, all these things are going to come together because they operate specifically. So they operate within measurement. So when is the market open? So there's different types of trading sessions when there's different institutions, different liquidity moving, and this is extremely important to learn. So we kind of know what forex is. We for the most part, know why we should trade it and be involved with it. Again, with the expectation of a return for our money, making our money work for us. Who makes up the forex market? Those institutions, central banks, and ECNs. It's about time, though, right, that you learn when you can trade, which is great because there's several different trading sessions that take place where there's going to be different liquidity administered into these markets. And because all of these different markets are working together, right, that's why trading in Forex is 24/7, okay? It is 24 hours a day, okay? So that means you can find opportunities at any time of the day, but there will be the best times, which you will learn eventually how to find the best times to trade an asset, okay, inside of the Forex market. So who is moving the market? Okay, it's buyers and sellers. It's supply and demand. Okay, that is who's moving the market. It's bank versus bank. As you saw over here, we are on the bottom of this list. We do not matter. A lot of people with their they think they're important, but they're not. These are the important players. These are the players who are going to be attacking each other. They do not care about your $20,000. They do not care about your $100,000. Okay, what they care about are the millions that are available through each other in this market. Okay, so don't ever get it twisted. Okay, they do not care about us. They only care about targeting each other. Okay, they move the liquidity. They have the liquidity. That money, they can take it from each other. Okay, so how do traders and investors use this market today? Well, a lot of traders in the markets, they use these markets to trade and invest, but how is it exactly that they're using it? So they're using this through technical analysis and fundamental analysis. So this is what I'm here for. I'm here so I can help you guys figure out how do you guys use the market today. That's the point of a course. It is to outline and basically guide you specifically as you have taken interest into the market and profiting from it and learning how to navigate that market successfully. Okay, so we will know then, right, how do you determine that technical value? We are going to be outlining tools, supply and demand, premium and discount pricing. We are going to be outlining how exactly you can get an institutional perspective on these markets. And these are the successful things that traders and investors use today. I was lucky enough to learn them, and I was lucky enough to study them and to stay committed. And I have found success with these concepts, tools, whatever you want to call it, this knowledge. It is valuable, and I still understand now that the payout is still beyond my comprehension. So for me, I always like to point this out. What is an index? What is like it's like an ETF, like is an index. So it's just a basket where don't put all your eggs in one basket. It's asset allocation. You could have things in gold, stocks, bonds, saving accounts, real estate, right? And then you go, here we go, foreign bonds, right? Art, silver, metals. You can basically trade all of these things in the Forex market. And besides these bonds here, you can't, the bonds market for that. But you can trade these things and you're able to use your analysis across several asset classes and basically find your lane, find your edge, and you're going to find results in that because of your dedication and your efforts too. So it's all on you. Everything that I will show you it's regurgitated, reformatted knowledge. I'm just hoping that I give this knowledge to you for free without you having to go through the pain and stress of paying for someone's course and still not having all the pieces connecting, still being lost and confused. following exactly what they're saying and still getting lackluster results. I'm hoping to save you all of that trouble in this. So asset allocation also goes into knowledge. Okay, I may be one person, okay, and I have one perspective. I am one man. You need asset allocation, you need knowledge diversification, you need to seek knowledge, okay, right? You need to pursue core market knowledge, all right? You need to pursue it because I'm one person, you're going to find out way more information from other people as well that is going to help you connect the dots, okay? And the forex market is beneficial to you because of the fact that it's trading CFDs, excuse me. These CFDs are important because they help you manage your risk. They help you really control, and you can really be cold and calculated, risking 0.5%, 0.25%, even 1% risks. And having executed those trades, whether they go for you or not, you will ultimately be having the edge in the market, or even if you're winning 50% of the time, your risk management will create profitability. And the Forex market has a great risk management compared to stocks, in my experience, where yes, you can put advanced orders in with take profits and stop losses, but there is no guarantee that those orders will be filled or when they will be filled, and you don't know how much of your equity drawdown you can handle before you are margin called or potentially losing money that is not even in your account and having to pay and deposit more money into your account just to keep your position open, or it's because you actually owe the institution that money and you would just have to deposit that money and lose it anyway. You don't want money coming out of your pockets. Forex allows you to learn before you start to trade with real money, and that's why the CFDs are beneficial. We can control our risk. We can control and protect what is happening to our equity. And again, it all goes back to the idea it is all up to you and it is all up to your dedication, what you want from the market. Um, that's pretty much it. I have kind of outlined a little something for you there, just a quick little overview. And as I keep saying, you have to keep pursuing that core market knowledge. I might have showed you a couple things here just to give a little bit of an intro for my course, but ultimately, no one's going to hand feed you success. You have to go. If you don't understand any of these questions, if you want to know more about it, then that is all completely up to you. You have to do the time and you have to do the due diligence to create the understanding for yourself. No one's just going to magically help you understand. Most of the time, is it that you won't understand any of this until you get the experience in the market and you start seeing why these things take place and starting to understand why it's taking place. It's all up to you, though. It's all up to you. Find your edge, trade your edge, pursue knowledge. Don't confuse yourself. Only look for what is relevant to you. And with that, I'm going to wrap up my introduction. I hope that it sparks questions in your mind. I'm not trying to answer all of your questions. I'm not trying to hand feed you with a spoon. I am trying to expose you, and with the hopes that you will find the answers you're looking for without it costing you money, without you having to go from group to group and from community to community, from YouTube page to YouTube page, seeking some sort of secret. There is no secret. That's what I'm here to tell you. It is all up to you. And this is why this is my introduction. Um, you want to be a successful trader, start studying, start researching. You will find answers, and make sure you're taking notes because it is a lot of knowledge and you're going to have to cross-reference a lot of different things to make sure that the theories, the concepts, everything is consistent with each other. Well, that's pretty much what I've had to say. If you enjoyed this video, I would truly appreciate if you had hit that like button. If you did not find value in the video, that is fine if you dislike my video. But what I would truly appreciate is input from you. Go ahead and leave a comment, give me some input, and maybe I can give a better output. I am not perfect. I am new to teaching, and I don't even really consider it teaching. I'm just sharing what I know, and most people are. So if you think that what I was sharing with you was beneficial to you, please hit that subscribe button. Return here for more. This is only the first section. There is going to be many more, and we're actually going to be getting into charts, real technical analysis, real things that a lot of people do not cover honestly, because they're just recreating somebody else's course and selling it to you for a profit. And many times people will mistake those profits from business as profiting from markets. And it's a little dishonest, and I'm hoping that you can see through the veil and you can, for yourself, okay, pursue that core market knowledge so that way you can see your own success. Thank you for listening to me. I appreciate that you guys came to this video. Um, other than that, the fact that this is just an introduction, it might have been a little boring. I hope you guys the best. Peace, love, and harmony. Always be with peace, love, and harmony. Okay? All right, guys. Love you guys. Hope you guys have a beautiful day. Thank you.